Okay, it looks like we have a little bit of a nervous market ahead of this symposium at Jackson Hole. And I don't really blame the market for being nervous, because if you look historically at what's come out of Jackson Hole, it hasn't been bullish for markets and it hasn't really been bullish for Bitcoin. I mean, here's a sneak preview of both the Bitcoin chart and the S&P chart in terms of what actually happens when we get to this Jackson Hole symposium. I think we need to talk about it though, because I actually think that right now, in terms of risk reward, it's probably more likely that we're going to get a bullish run ahead of Jackson Hole or after Jackson Hole than the market actually going down. And I want to show you all the data that actually supports it. I'm not talking, I actually have a lot of data to actually support that. So I think today, given all the nerves in the market, let's talk about Powell, let's talk about Jackson Hole. It's happening on Friday. Today's Wednesday. You kind of need to get yourself ready for what's about to happen. It could move the market. I'm going to show you the market moves both ways, up and down. And I'm going to show you what I'm doing. And I've got a trick up my sleeve to actually play this. So listen, if that sounds good to you, let's go. Never a dull day in the markets. And as I was saying yesterday, when the markets were coming down, I actually posted something on Twitter. In fact, I'm going to show it to you guys. I actually said something like, hold on, where is that? Let's just go to my Twitter. I said something like, I think I'm not ready for another correction, because I really am not ready, because this run has actually just started. And like right now, honestly, I'm not emotionally ready for another correction. And I don't think one's going to come either. I don't actually think one's going to come, because I actually think this whole market nerves around Jackson Hole is a lot of nerves, and I actually think it's going to actually pan out okay. And I'm going to show you what the data points that are actually showing that to me, and then I'm going to show you a little trick in trading this kind of event and many others events which are very, very, very similar to it. I think I've cracked something here, so I want to show that to you guys as well. So listen, if that sounds good to you, 𝗥𝗍𝗥𝗍𝗄, rise and shine. Welcome. I see all our friends here in the chat. Chris, Sean, Rold. I see Josh. I see the researchers. The researchers are also watching the shows here. We've got a big show today. We're going to cover all the whole of Jackson Hole. What I need you guys to do is, like, look, if you're not already subscribed to the channel now, then don't subscribe, because I think you've missed this bull market. Rather come back in the 2020, when's the next bull market? It'll be like 4 years. So come back in the next bull market in 4 years and then subscribe if you haven't subscribed already. I think let's just say that you've missed this boat and you'll catch the next boat, right? For those of you who are subscribed, I need you guys to obliterate the like button. Let's go. I'm going to give you guys all the alpha. I'm going to show you. Oh, and Ashish, I see you as well. I know you also. I can see you. I'm also surviving on ramen. Yeah, let's get some positivity. I think this is going to be a positive show. But you guys need to obliterate the like button. Sean, bro, I love you too. I see you here every day in the chat. Bangkok Bert, I've seen you here every day in the chat, every single day. All right, let's talk about what's happening, what actually is happening on the markets, right? And you know what? In the beginning of the week, we didn't know why Bitcoin actually dropped, but I think now it's becoming a little bit more apparent that what Bitcoin was doing, it was just front-running the stock markets in preempting the nerves around Jackson Hole, right? So around the event that's happening at Jackson Hole this weekend. And where you see Bitcoin now is in a very, very, very interesting place, right? Because as I said to you before, this is nerves, right? When we get to under this level over here, which is the previous higher low, if we break below that level and close below that level, then I'd say that the nerves are turning into something more than nerves. Maybe the market structure is actually playing out like that. Otherwise, all I can say is that this big breakdown in Bitcoin was actually just front running what was happening on the stock markets, right? Because the big breakdown in Bitcoin came on Sunday night when the futures markets opened, right? Which was when the futures markets opened, we had that big dip on Bitcoin. That was the big candle that basically took us down. And initially we were like, what's going on? How is it that Bitcoin's breaking down, but stock markets are not breaking down? Turns out that like 3 days later, stock markets actually caught on that, and they had their red candle, and particularly the tech sector of the stock markets. And the reason why that's so pertinent is because that's the risk sector of the markets. And if the markets get nervous, it's the risk sector which actually starts suffering first, right? And that's what you're kind of seeing here. You're seeing the NASDAQ with quite a big red candle over here. When I looked at the SP 500, or probably even better is to look at the Dow Jones, and you look at the futures on the Dow Jones, they didn't have such a big red candle, right? And all that shows you is that the market is nervous It's moving from risk into what they perceive to be more safety. And they're doing this ahead of the Jackson Hole symposium. And what you can see is like the tech stock started to suffer. You always see that when you look at big stocks like NVIDIA, because NVIDIA is where all the market cycles have been made. And then like when the market gets nervous, then NVIDIA has these big red days. And they had a 3% day yesterday, which is the worst day since April. So the markets, what are they worried about? Well, what they're worried about is that Powell will set an incorrect tone after the Jackson Hole symposium this week. And that will set the tone between now and September for the markets actually coming down, right? And we'll dig into that in a second when we look at the data. It's important to see that in the nerves of the market trying to break, to get a tone, let's actually refresh this. I like refreshing this tool live. The reason why I like refreshing this tool live, it's so good, is you can see how people are actually changing their views. So 84.5% of people before Jackson Hole symposium, Jackson Hole, not Jackson's Hole, Jackson Hole. Repeat after me. Jackson Hole, Jackson Hole, not Jackson's Hole, not Jackson's Hole, Jackson Hole. Okay. So they're saying 85% chance of a rate cut in September, and they are pricing in one rate cut here, two rate cuts, so two rate cuts this year. Now they're pricing in two rate cuts this year, and I think this will all change when we hear Powell talking on Friday. In the meantime, what we're seeing that sentiment is very nervous. Like for a 3 or 4% drop in Bitcoin, I must say I've never seen the markets get this nervous. And it's like, these are traders that I actually respect. I mean, Thomas Carter said, retail panic is back. Bitcoin under 113,000 triggered the most negative sentiment since June 22nd, right? Also, one of the traders, this is a trader which I really respect, his name is Phil. And he was basically saying, look, like Bitcoin could be either breaking down here or breaking through. He says Bitcoin is effed. We fall back below the major high, the biggest bull trap of all time. He's basically saying if we fall back here, then it could actually take us all the way down. I don't believe that's going to happen. I'm going to show you why in a second. I don't believe it's going to happen. But yeah, the market's pretty scared. You can see it in the ETF flows. So if you just look here at the ETF flows, what you can see here is that yesterday we had big ETF flows, outflows. We had Bitcoin out $500 million, ETH out $500 million. So markets are pretty nervous ahead of this. Two other people that are nervous, which are not really markets, but two other people that are actually nervous here. So Trump, he's quite nervous because he's almost prepping Jerome Powell, saying, could somebody please inform Jerome too late Powell that he's hurting the housing industry very badly. People can't get mortgages because of him, because the mortgage rates are so high. There's no inflation. He says there's no inflation, and every sign is pointing to a major rate cut. Too late is a disaster. So Trump almost priming Powell before his speech on Friday to almost say, listen, bro, you better do the right thing here. Also, Besant going on traditional TradFi media on CNBC, and the tone of what Besant is saying is like, Powell, bro, watch out. We've already found your replacement.
Struggling. And, you were asking me about interviewing Fed candidates, and there's the ability, everyone has the ability to look at the current data, but let's just think about if we keep constraining home building, then what kind of inflation does that create 1 or 2 years out? So, a cut here could facilitate a boom or a pickup in home building, which will keep prices down 1-2 years down the road.
So you see, they're almost like giving him hints, because they're not speaking to him on the phone. So they're sending him hints via TV. They're like, listen, bro, the housing market's suffering. You could end all the suffering. You could end all the pain. All you need to do is you need to cut rates. If you cut rates here, you could actually save face. And they're basically sending him these messages. And so, yeah, the market is nervous. But I think what we need to do is we need to take a deeper look into what the symposium is about, what could happen, what the probabilistic outcome is of this, and not just fall into the retail mania. And again, I'm saying here, I'm looking at this and I'm saying, this is a nervous market. This is not a scared market, right? What you can see here is the market is nervous. It's not going below. It's not going below the previous higher low. And we need to just make sure we maintain that. Otherwise, yes, of course, we can get a breakdown, and that's going to happen. And ultimately, that all depends on one thing. And that is, what does Powell say at 10 a.m. on Friday, 10 a.m. EST on Friday? What does Powell say? What is his tone? That will determine the way forward. So let's look at what we can expect from Powell on Friday. And to set the scene, I think what you need to do is you need to understand what this Jackson Hole Symposium actually is. And I think the best description for what the Jackson Hole Symposium actually is what I tweeted yesterday, and I said, it's pretty simple. The Jackson Hole Symposium is like an FOMC on steroids, right? And I asked ChatGPT because I wanted to explain it to you guys quite simply. And ChatGPT said, look, it's a symposium which is part of an annual 3-day conference in Jackson Hole, Wyoming. It's hosted by the Federal Reserve of Kansas City, and it's been done so since 1981. And basically, all they do is they get together and they discuss a whole lot of things. And the theme for 2025 is labor markets in transition, demographics, productivity, and macroeconomics policy. As part of this, Powell has a speech, and all our eyes are on Powell's speech. His speech happens at 10 a.m. It happens at 10 a.m. On Friday morning, and everybody is listening to see whether Powell's going to be dovish or whether Powell's going to be hawkish. Simple. And the dovish or hawkishness is not like he doesn't get up there and say, okay, I'm hawkish or I'm dovish. It's in the nuances. It's in like the one or two words. And that's really what we're talking about here. We're talking about making sure that the one or two words that Powell uses are the correct words and in terms of sending out the dovish and hawkish signals. The important thing around understanding Jackson Hole is that it always happens towards the end of August. Now, the thing about the end of August is that the market volumes, because remember, in August, everybody's on vacation, specifically the bankers. Bankers don't work in August. It's like the last month of the summer vacation. And so what they do is they run this symposium at quite a bad time. They run it when the stock market trading volumes are actually quite low. So this is a chart that shows you stock market trading volumes. And if you look into this chart of stock market trading volumes, the one thing that you can see is that the worst month for the S&P between 2008 and 2025, the worst month is the 8th month, which is August, right? Also my birthday month, by the way. So what you can see is that the worst month for the S&P 500 in terms of volumes is August. And when you have a symposium where it's like an FOMC on steroids and they discuss economic policy and economic data and everything to do with economic policy and economic data, and you have this in August, every word that you have can actually move markets a lot because there's no volume. There's just no buyers. The buyers aren't around. And so, by the way, you heard that click. We're going to talk about that. Did you hear that little click? We're going to talk about it because that click is going to change your lives, guys. It's going to change your lives. So what you can see is every time that this happens, every time that we have a symposium, it actually causes massive moves. Big moves for the S&P, -4, -7, minus. I think you're starting to understand where these things are going. And you also see that for Bitcoin, we have huge moves after the Jackson Hole Symposiums, right? So we need to talk about what the effects actually are and why these effects actually happen. And I think the best way to talk about it is to actually look at the historical data on this. And remember again, this happens in August when the volumes are low. So every word that Powell says actually lands up moving markets. So let's look at the history. Let's go back to history and understand what history suggests we can expect. This was, by the way, it was covered in our free, absolutely free newsletter that we publish every single day. By the way, if you want that, there's a link below to Good Morning Crypto. You can have this newsletter for free. It comes out before the show, and I use this newsletter when I actually land up making the show, right? So let's talk about what actually happened. And so in 2022, Powell gave a hawkish message, and the SPX fell -3% in a day. Now, what was that hawkish message that Powell gave in 2022? He said, higher interest rates will bring some pain to households and businesses. What he spoke about in 2022 is he spoke about how inflation was running very high and how interest rates are going to be higher for longer. And so what happened after the 2022 Jackson Hole Symposium is you can see that Bitcoin and the S&P 500 went down. So the S&P 500 went down 16% because that was the period where bankers realized Powell is going to keep interest rates higher for longer. And that, of course, flowed into the Bitcoin chart, which you can see here in 2022, and Bitcoin went down like 30% after the 2022 Jackson Hole. 2023 was a slightly different year, right? So in 2023, let me just go back to that. He said, navigating by stars under cloudy skies. Okay, so that was basically what he said, 2023. The FOMC would proceed carefully, navigating by the stars under cloudy skies when deciding whether to hike at future meetings, which wound up signaling it would not hike at the next meeting, etc. And what did we get in 2023? We had a drop, but it was a much smaller drop. It was a 7% drop because here the markets were expecting it. 2024 was a little bit more of a curveball, right? So in 2024, he said he was dovish and we still dropped. Or at least that's what happens when you look at the chart. So 2024, Powell comes out and he says, the time has come for policy to adjust. And when he said the time has come from policy to adjust, he meant from a tightening policy to actually start reducing rates. And what happened in 2024, if you look at the charts, is you'll see that we actually landed up dropping 4%. But it's not exactly like that. And the reason why it's not exactly like that is because in the run-up to the 2024 Jackson Hole meeting, what you can see is that the markets actually started to strengthen in the run-up. After the symposium, they gave away some of their gains, but they still remained higher than they were the week before. What does that mean? It means that the market went in there with dovish expectations and probably more dovish than were actually reported. But it was just a little blip in the radar, and we actually started going up. So if you look here, I think this was 2023. He said, my confidence has grown that inflation is on par to 2%. The time has come for policy to adjust. The timing and pace of rate cuts will do the incoming data. We don't seek or welcome the market. This was in 2024. And so this was a very, very, very dovish going into the FOMC. Here's a summary of the last 13 years. Now, since 2018, we've had Powell. The returns prior have been here. So generally, we had a 0.6, we had a 2.6, we had a 2.9, we had a 1.5. And the returns afterwards have been mixed. And really what it comes down to is we've got to look at the situation of the market in that time. Okay, that's basically what we're looking at. 2023, he said, yeah, look, the time is, we don't seek to, okay, this was 2024, by the way. Okay, so what are we saying about this Jackson Hole symposium and what could happen in this Jackson Hole symposium? The first thing is what we are all eyes on Powell, and we're waiting for his speech, which is going to happen at 10 a.m. EST live. We will bring you that speech and we will watch that speech together like an FOMC meeting. So on Friday, we'll do like an FOMC meeting on this channel. We will listen to every single word that Powell says live. This, I think, is more important than actually having an FOMC. Do you agree with me, 𝗏𝗏𝗏? I mean, it has to be, right? Okay, so we will bring this to you live. We will cover this with you live. Now, remember, it's all about the nuances here. It's all about the nuances here. If you look at the topic is labor markets in transition. Powell's speech is at 10 a.m. Yeah. So why does the market care? Because it happens during an FOMC gap. There's 7 weeks between this and the next FOMC, so to speak, right? Or between the two FOMCs. And in between this speech and the next FOMC, there is still another set of data. So a lot of what he says, or a lot of what we think he'll say, is he'll say something like, I am reliant on the data that's going to be coming out, and he's going to hint that if the August data supports for a rate cut, then we'll get a rate cut, and if the August data doesn't support for a rate cut, we're not going to get a rate cut. It's about nuances, and the nuances that we're actually looking for here is the trigger words, right? Now, you need to learn to listen to these trigger words. So if you get the words flexible outlook, data dependent, and balanced risk, that's code word for dovish. If you hear restrictive, if you hear additional tightening, if you hear higher for longer, that's hawkish, right? So it's all about which words he uses. And let me tell you, Powell's going to be choosing his words very, very, very carefully when he actually does it. So to summarize here, he says markets are currently selling off in preparation for the Jackson Hole Symposium. They're pricing in right now a hawkish tone. So this is where the hint comes in. Right now, markets are worried. They're pricing in a hawkish tone. They're pricing in a hawkish tone because they know that Powell has been under attack. And they know that he's maintained a hawkish tone. And they know the PPI data came in a bit hotter than expected, right? Powell speaks on Friday. If he hints at no rate cuts, the market is front-running the move. And that's the sell-off. But if he comes in soft, so the market is prepared for a hawkish Powell. But if Powell comes in soft, then I think we could get the markets actually rallying after Friday. And that's exactly what Tom Lee says. He says, in conversations with institutional investors, more expect the Fed Chair Powell to lean hawkish as he doesn't want to be cornered to cut. But then this becomes the base case. And then probabilities favor his statement to be viewed as dovish. Because if you're expecting hawkish, it's the opposite of what we got here. Remember, in 2024, the market was expecting bullish. And so it went up for the week before, but then it dropped. Okay. Now it's the other way around. The market's expecting hawkish, so we dropped into it. And if we get dovish, then the market actually starts going. I think the charts are going to tell you the story here. I think if we break down below this and we hold below this, then I think it signals that Powell is going to come out hawkish. I think as long as we maintain that level, as long as we defend that level, then I think the charts are giving you the news before the news actually comes out. In the meantime, what we're seeing is a slight de-risking. We saw the ETFs de-risking, the Bitcoin ETF minus 650 million this week. The ETH ETF also minus 650 million this month. Slight de-risking. But if you look at the CME demand for ETFs for leverage, what you can see is it's dropped slightly from 9.9% interest to 7.6% interest, but it's still pretty high. Like, what it means is that net, the institutional investors are willing to pay 7.61% to go long now. They're willing to take leverage at 7.61% to go long. When they're willing to pay high leverage, when they're willing to pay 9% and 10%, that means they're very bullish, or the most bullish they've been. They're not the most bullish they've been and starting to come down, but they're not bearish. Like, they're not at 2 and 3 and 4 and 5%. They are still bullish. So all this is showing you is that they are slightly nervous. They're not panicking. They're taking a little bit of a risk off. And right now, the probabilities are leaning towards a hawkish symposium on Friday. But guys, it could swing the other way. It could swing the other way. Willie Woo says, if he looks on-chain, Bitcoin rallied to 124.5 and then back down to 112. And that was driven by liquidations on-chain because he's analyzing the on-chain data. He says Bitcoin has been overly speculative. The real question is, what are investors doing? MCR risk signal is dropping, hinting at investor liquidity returning. If the trend continues, Bitcoin is in great shape to move higher. So he's calling exactly what Tom Lee's calling and exactly what I'm calling, which is nervous and maybe bearish into the FOMC, into the Jackson Hole Symposium, and then a turn, and later on we land up going back up here. The other thing which we need to note here is that the market is really starting to worry about a recession, right? So the markets are telling Powell, and Powell's looking at these indicators, and the markets are basically saying, Powell, we are worried about a recession. Powell doesn't want a recession. Like, the one thing that he doesn't want is more than high inflation is he doesn't want a recession. And what the markets are telling Powell is they're telling him, Powell, there is a recession on the horizon. You need to wake up and you need to see the fact that there is a recession on the horizon. And how the markets are doing it is they're looking at two charts. And the two charts that the markets are looking at, they're looking at the oil chart and the gold chart. And what you can see is that right now we're in a pattern where the oil price is going down and the gold price is going up. What does that mean? Oil is a market that represents how people see the future economic growth. Because if there's lots of economic growth, then you say, okay, well, we're going to need a lot of energy to produce a lot of things because people are going to be spending, and therefore the price of oil should go up, right? And here, the price of oil is on a gradual decline. And when people are leaving oil, what they're doing is they're running into gold. What does that mean? It means that they're saying, we're worried about the health of the economy, and we're running into safe haven. And that's what Powell and what the market's actually looking at. Powell's job is to turn this thing around. He needs to convince the market that there's not going to be a recession and that there's no need to be in the safe haven. And if he does that, then that will mean that liquid risk assets start running. Altcoins will basically start running. So again, all eyes basically on Powell. Again, I'm in the same boat as Tom Lee here. I'm saying that we go down, down, down until Friday. Friday, we could get a lot of volatility going into Friday. And then 10 a.m. Friday, lots of volatility in the speech, lots of nerves, people closing positions. And then my suspicion is Saturday, Sunday, cool off. Monday, we start moving back up. That's where I'm placing my chips currently. I don't know. Let me know in the chat if you agree. Let me know in the chat what you're doing. Either way, I kind of agree that the one chart that is actually really, really holding well here is the ETH chart. I think the ETH chart's holding well because Tom Lee is the natural buyer. Remember, he said he said 4075 to 4150. So he's kind of holding up the price there because the market knows that he's got a lot of firepower and he's going to do it. And that's why for now, that level is basically holding on the chart. I agree with Miles here, where he says probably the best trade right now of the cycle is to be in ETH and ETH betas. Why? Because the treasury bid is exhausted, is less exhausted, because Saylor's been buying for a long time, and the ETH treasury bids are quite new. Time-wise, the rally is less exhausted. And also, Bitcoin's already had its run. ETH hasn't had its run. So I do believe that we're going into the next part of the cycle. I believe that this little blip in the radar is just the nerves. Now, look, one thing that could happen, and we need to see one thing that could happen, and we need to be prepared for this because you never know. You never know. Is that Powell goes full tilt hawkish, and if he goes full tilt hawkish, then we get the correction that is due, that we're expecting, and we get it now instead of late September. That's one of the scenarios that we need to be prepared for. I don't think it's going to play out that way. I do think we're going to get a correction between now and the end of September, but I don't think it's going to play out that way. And so for me, I'm taking the other side of that trade. And my side of that trade is, look, I'm not taking crazy leveraged, mad positions, but I am staying quite risk on because my thesis remains that this is a little blip in the radar. Let me know in the chat what you think. I do. Okay, someone says I'm scared. Someone says, did my comment get deleted? No, Joe, your comment did not get deleted, sir. Guys, just a few things. I want to show you something. You remember you heard that little ping. Well, that little ping is, for me, one of the most exciting things that's happened in a long time. And the reason is that we're entering a new stage of trading, or a new type of trading. And what this trading is, it's called news trading, right? Now, for those of you who don't know what news trading is, on Friday, when Powell talks, the news, there's a massive, massive, massive opportunity to actually trade that news, right? And it's not only when Powell talks, there's many, many, many opportunities. I actually want to show this to you, where you can actually trade the news, right? And the way you do it is you do it with a trading tool called a news terminal. So what is a news terminal? A news terminal is a terminal that feeds you news very, 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 very quickly. It's all about speed. It's like we're talking like milliseconds of speed. And when you get the news, you've got to be able to take the trade immediately. Now, what this has done is it's actually bred a new type of trader. It's a trader like a TradFi trader, which sit and trade only on news and when things come out. And the minute that news comes out, you better have your finger on the trigger and you better be ready to trade, right? And so what a news terminal does is it aggregates news from multiple different sources, and the sources are very important. It does this very quickly. And the next thing that a news terminal actually does is it allows you to take positions with one click without going to an exchange. So for example, there was news here. It says smart whales are still here. 1 million SOL transferred from Binance to an unknown wallet, right? Okay, now, theoretically, there's two tokens that could move there, Binance and SOL. And what this news terminal allows you to do is, with one touch of a button, I'm going to touch it now, but I don't think it's going to let me trade. I can open a position. Okay, thank God it didn't let me trade because I didn't have money in that account. But I can actually open a set position. So you can preset your position sizes, and you can sit here and you can watch the news. This news will be the quickest news you've ever seen. The reason is it's coming from sources with a very, very, very optimized speed. Like you can see, like the milliseconds that we're talking. 146 milliseconds after the news was released, we actually got this trade, right? It's literally, we're talking milliseconds. And then if you see news that is amazing news, you just click this, bang, and the trade goes straight through to your exchange. So you don't have to waste time. Now, the reason why I'm so excited about this is because we've got 1 or 2 news traders in our teams, and for months, they've been whipping our asses on trades. Okay, you don't understand how good these guys are. Because they sit there, and they literally they sit there and they're obsessed with the news. They watch, and they watch, and they watch. And as soon as they see news coming out, meme coins launching, interest rate decisions, statements from Powell, whatever it is, they are connected to the exchange with one click. Bang, click. Okay, so I'm very, very, very excited about this product because I think that this is like a revolution in trading. It's our very own news terminal. It's called 247 terminal. It's not commercially available yet. It's not available at all yet, actually. It'll only be available sometime next week for commercial use. But we have made this version available to our front runners to use it and to test it and to become addicted to it. I'm addicted to this thing. Okay, I can tell you, I am absolutely. What happens is when you open positions, you can actually see all your positions from all your exchanges sitting here in the terminal. I don't have any positions open in the terminal, and you can actually manage all your trades while you're actually watching the news. It is. You'll see when you start using this, it's a mindfuck. It's honestly, it's like when on days when there's lots of news, it goes buck, and you can like literally trade. So yeah, if you guys are in front runners, I know that we are dropping this into front runners today so that you guys can start messing around with it for the next week or so. In about a week, we're going to launch it commercially, and then we're going to open it up to our community and to anybody else that actually wants to trade. I guarantee you this is one of the fastest news terminals that you've ever seen. And I wish news would come out now just so I could show you guys how amazing it is. But there's no news now. For God's sake, the one time that I want you guys to see the news, it's happening. Anyway, front runners, if you are in front runners, you know where to get this. If you're not in front runners, I've given you a million opportunities to sign up. There's another opportunity for you to sign up. Guys, there was a news. We just missed the news. Oh no, that was my Discord. Okay, that was close. You see, that's the thing. Your heart starts to beat you when every time it makes a noise because it tells you that news is just broken. Front runners, if you want it, it's in front runners for you guys to test. For the rest of you, if you want to sign up to front runners, just to give you an idea, a news terminal costs $599, $600 a month. This one's going to be a little bit cheaper, specifically for our community. It's going to be a bit cheaper. For front runners, you guys are going to be testing it for us, or you're going to be using it pretty much for free. You guys are going to be using it for free. There's a link to front runners if you want to sign up for front runners. Johnny, is there a link? Johnny, come in. Johnny, put a link here for us quickly. If people want to sign up and get access to the news terminal, they can actually get it on front runners. Otherwise, one more announcement. If you guys are from India and you want to watch the Banter India channel, Crypto Banter India, we have a Crypto Banter India, which we'll put a link for you guys. It's in Hindi, I think. Eh? Let's just listen. And I'm gonna unmute it. There, I'm unmuting it.
नमस्ते सत श्री अकाल आदाब सब।
नमस्ते people.
मैं फिर से एक वीडियो लेकर आया हूं आपके लिए जिसमें मैं आपको 3 ट्रेड्स देने वाला हूं इस रेड मार्केट में। सब मैसेज कर रहे हैं ना कि मार्केट गिर रही है।
Guys, I mean that's for people in India. If you want to watch it, Crypto Banter India, there'll be a link below. Otherwise, chaps, I'll see you guys again tomorrow, and on Friday we're going to be watching Jackson's Hole right here. Jackson Hole right here with you guys live. Until then, my friends, trade well.